Brian Grimes, your real estate mentor, back with another action-packed session. Today, we're going to break down the 10 hottest housing markets for 2025, according to Zillow. So if you've been looking for different states to invest in, different cities to invest in to get the most bang for your buck, make sure you stick around to the end because we'll be dropping all that knowledge for you. If you're new to the platform, like, comment, subscribe, leave a comment that says I subscribe. For everyone who leaves that comment, I'll send you instant access to my free real estate training. It'll show you how to acquire properties all across the country. And we're creating new trainings kind of all the time. I actually want to walk you guys through some of that on this session. Of course, if you are interested in any of our programs, we have our real estate ride along tour Saturday, March 15th. You're going to spend the day with me touring properties in the city of Philadelphia. We have our boots on the ground program where we find, finance, rehab, tenant, and manage properties for you. So if you want us to just kind of turnkey some deals for you, we can buy and hold or buy and flip for you. That'll be good. And then we have our inner circle. So I've been kind of building out our course content and our community group because I've been getting a ton of questions from people wanting to get connected really into the network, even more so than just dialing into knowledge and even our turnkey kind of boots on the ground stuff. But how do I get connected with private money lenders, DSCR lenders, architects, engineers, kind of all of the different relationships that I've built over the years. So I put them into this community group that I've been building out. And this is where we'll just go and kind of answer all your questions. If you guys want access, you can click the link in the description below to try to get access there, or you can DM me if you're on Instagram, DM me cash flow, and we'll send you kind of information on how to get tapped in here. But we're jumping in and answering questions. Somebody asked for like deal analysis. I shot them back a video response here. So we're doing stuff like that. We have a full classroom here. So I've migrated all of our course content over here. So, the fast track to your first rental, how to find off-market deals, property analysis, and done for you property analysis, the whole Section 8 BRRRR strategy kind of breakout there, filling your property with tenants and screening, the no money down playbook. A lot of you guys need this playbook, how to do deals with no money down, the ultimate full gut rehab course. So we give you a crash course on how to full gut renovate properties. It's all here. So once you join the community and get locked in, you can kind of dive in to any of these modules and just get your game up. And then we have the calendars, the inner circle calls, you have all that. But more importantly, you can connect with a lot of different members, people who are doing pretty cool stuff and who are tapped in pretty well. So if you want to tap into the group, just reach out, DM me cash flow, drop a I subscribed, or you can click the links in the description or in bio and you can get into these. So guys, let's get into some quick housekeeping kind of updates, and then we will get into Zillow's top 10. One thing to know about Zillow's top 10 is Philly's is in the top 10. Philly is number 5 out of the top 10. So Philly is top 5 in the country in terms of cities that you want to be looking at investing in for a variety of reasons. But we'll get into that breakdown as we go. A question I've been getting this week is mortgage rate predictions, kind of where are rates headed? What are my thoughts there? Are we going to have a good interest rate environment, a bad interest rate environment? This is what we're seeing kind of from the different analysts. So as inflation stays higher than hoped and the Federal Reserve looks less likely to lower its benchmark rate, mortgage rates aren't likely to move much this month. So I wouldn't expect any moves. I've been predicting the mortgage rate industry is kind of going to, rates are going to pull back maybe around like June from what I'm seeing. The market needs some time to balance out, to digest the new regime that is in office now. So I'm thinking around June, kind of get through half of this year, you're going to start to see rates pull back a bit. And that's going to give you an opportunity to really crush the game. If you're working on deals now, you'll likely be refinancing into really low rates. Or if you have existing portfolios, as rates go down, the prices are going to go up. You're going to grow an equity spread that you can tap into through a cash out refinance as well. Let's look at kind of the interest rate forecast. Let me blow this up for you guys, especially you guys on Insta. So the mortgage rate forecast for the average 30-year mortgage rate by the end of 2025. And this is how you want to think about rates. You don't want to think about where rates are at today. Who cares realistically, especially if you're not at the closing table. If you're at the closing table, it's very important. If you're building a house, if you're getting more deals ready, you just want to know where they're going to be at generally by the end of the year. By the end of the year, Redfin's projecting 6.8%, which would be kind of the same or slightly lower than we're at now. Bank rate 6.5%. Mortgage Bankers Association 6.4%. Bright MLS 6.25. Fannie Mae 6.2. So maybe we land somewhere in between this, around like a 6.4. And that's not a, I mean, it's not a horrible rate for a 30-year fix. Certainly not historically low, but you can cash flow, especially in today's market. So current mortgage rates should be trending down over the course of time. This is kind of like your historic view of where mortgage rates have been over, a good period of time. So, um, they've kind of been bouncing back and forth between 6.5, 5.5 to 8%. 8% is the ceiling. There's a pretty strong rejection when you get, in my opinion, like 7.4%. When you get into this range, the market just seems to reject it. Mortgage applications will slow down. The market will kind of slow down. They'll reject it. It'll kind of go a little bit lower. We're in an upward trend, like a step stair upward trend here. So I'd be waiting for rates to kind of break this upward step stair trend line before we can say, yeah, they're kind of trending back down. So they'd have to kind of break below 6.78. Once they break below that, we're probably looking at more of an uptick there. So that's your interest rate update for now. This will kind of get updated, every month. So we'll do more of these. Guys, if you're getting value, like, comment, subscribe, leave a comment that says I subscribe, share the content with someone else who you want to get value. Drop your questions in the chat section. We'll kind of answer them as we flow through. So if you have any questions, drop them in. Here's another cool thing before we get into the top 10 list, and we will get into it pretty quickly. Massachusetts home buyers should consider the impact of a new ADU law. So this law went into place February 2nd. I'll blow that up a little bit. February 2nd, there's a new ADU law that just went into effect on February 2nd. So Massachusetts home buyers, anybody in the state, you now have the ability to build an ADU as long as you are in compliance with the single family zoning laws. So as long as you have the land lot size, you can do this. Supporters of the legislation believe it will lead to construction of 8,000 to 10,000 new ADUs in the next 5 years within Massachusetts, Boston, kind of the greater area. So it's going to create a lot of opportunity. Most of this ADU stuff has been on the West Coast. It's been in, California, San Francisco. It's going to start trending to the Northeast as well, now that Trump is in office and they're kind of pushing for a lot of these things to happen and happen a lot sooner. It has to happen at the state or local level. They can make federal regulation that says you need to make this happen and kind of give deadlines, but it does have to happen at the local level because all of the housing codes and zoning codes are local. Under this new law, homeowners can add ADUs of up to 900 square feet or half the size of their primary home, whichever is smaller, without special permits. So the cool part about this is it's a by right. It's a by right zoning. What that means for those who aren't in the 100 Keys Masterclass and who haven't gone through kind of that level of training, by right means you can do it without needing a variance, without sitting in front of a zoning board, without going through a long delayed process. And in many cases, you can get your permits right over the counter. So if you show up to the zoning division with plans that are up to code that a licensed architect put together, they're more or less just going to stamp them quickly, give you a same day right to do it. Like, you do have to get your plans up to code, but you have the right to do this. And that's huge. All of these ADUs aren't by right. A lot of them you do have to get variances and different things of that nature, but making it by right, I think a lot of people are going to do this. And the Boston market in particular, I would anticipate see some ADUs for people who have the land to do it, because everybody in the city doesn't necessarily have that land. So I thought that was cool, but it's also an indicator of what could be coming to your city, to your state. So keep an eye out. Do your research, do a Google search, once a month, and see when it hits. It'll probably hit maybe nationally over the next year and a half, I would say, at this rate. Let's get into these top 10. And guys, if you're getting value, like, comment, subscribe, leave a comment that says I subscribe. Share the content with someone else who you want to get value. If you're interested in our Boots on the Ground program, where we find finance, rehab, tenant, and manage for you, just reach out, DM me Boots on the Ground, drop a comment that says Boots on the Ground. I'll get you tapped in there. And once again, we have our real estate ride along tour Saturday, March 15th. We only have 5 tickets left. So if you want to grab one of those tickets, spend a day with me touring properties and learn how to put these houses back together and get your hands on some of this course content. In particular, when you come out to the ride along, we hit you off with this ultimate full gut rehab crash course, which will break down like becoming a GC, managing your own projects, building your own construction crew, my top contractor interview questions. That one's a gold mine of information, because there's a difference between going out and trying to just like build a crew, find a guy off the wall at Home Depot, hire an electrician, versus actually knowing what questions to ask. You need to know how to interview a contractor. What questions do you ask? How can you tell a professional from a non-professional? You need to get into that level of detail so that you don't get burned, because you can hire bad contractors. You can hire bad people, and there are ways to avoid that as well. And then mastering full gut rehabs. There's like 3 sections of that, because it's there's just a lot of information in full gut rehabbing properties. I probably have in our course content like 5 sections on just full gut rehabs and things that can go wrong. I went off on a rant on our last mastermind call, which everybody has access to, even if you missed it. And I know there are going to be some existing members who missed the last mastermind call. I have it right here. We had about 40 people on that call on February 12th. We went on some rants about kind of what you're dealing with when you're dealing with these full gut rehabs, how to manage your contractors, some of the issues your contractors are dealing with as well. And understanding that information allows you to work better and build better relationships with your contractors, which is important if you want to scale. It's very important. So here are the top 10 hottest housing markets for 2025. We'll just dive into them. I'll give my 2 cents on some of these markets. Coming in at number 10 is Salt Lake City, Utah. Encircled by mountains, Salt Lake City has 10 ski resorts within an hour's drive of its airport, making it a world-class destination for skiers and outdoor enthusiasts. That to me kind of screams like Airbnb. If you can do it, if they're not banning it yet in certain areas. A lot of people, if you can, where you want to do Airbnb is within that travel industry. If people are coming here to golf, if they're coming here to ski or whitewater raft or whatever it is, buying next to that and then building the product around that. So like if I'm buying next to a golf resort, I'm gonna have a property with a rooftop deck and have like a drive, like one of those drives with like the net right there, or like the digital virtual drive on the roof. So I'm gonna build a product so that golfers want to come out and spend their time at my property. You can make more money. You can start charging premiums. That's really the right way to do it, versus just trying to do Airbnb and just, oh, I'm just going to do an Airbnb in Miami. It's like, okay, you'll be one of many. But if you do it in a specialty area, you can actually get a lot of money. But Salt Lake City does not have cash flow. So this would be more of a flippers market, expected to grow by 2.3% in terms of appreciation within that market in 2025. So certainly not a flat market. It's a market where you can get a little bit of value. So interesting market if you want to flip. Definitely not a buy and hold market. We'll talk about why, because I did some analysis on which of these markets are the best for cash flow, and we'll get into that as we wrap this thing up. Number 9, Richmond, Virginia. I would say another flip market. Richmond is pretty expensive market. North Virginia in general and different parts of Virginia can be expensive. Projected to appreciate 2.9%. Home selling an average of 9 days. Really good flip market if you want to flip houses. So number 9, Richmond, Virginia. Kansas City, Missouri. Western border with Kansas, a storied place known for its musical history, barbecue, fountains. Midwest, typical home, 300K, selling 9 days, good flip market as well. Charlotte, North Carolina, I've seen kind of mixed, where you can do a lot of flips there. That's coming in at number 7. Can do a lot of flips in Charlotte, but it can also be a buy and hold area. You have a lot of colleges, University City, men's teams, women's teams, pro soccer team. I've never lived in Charlotte, but the people that do live there, they love it, especially like the young kind of working class. So you'll always have rental demand there. St. Louis, they got big brick built houses out there, big quadplexes. I've seen a lot of quads out there selling 60, 70K. They have a huge housing stock that needs full gut rehabs, that needs renovation. that hasn't been really rehabbed in a long time. So you can go out there and make a killing. The one issue there, I would say, is you need somebody who operates there locally. Everywhere you go, like people ask me, Brian, like, what's the difference between Philly and Baltimore and um, Baltimore and Cleveland? There's so many differences when you start to develop, when you try to build houses and you're pulling permits, and the system is different, and what they require permits for is different, and their timelines are different, and their zoning board is different. All of those things can slow you down, cost you more money, and turn a good deal upside down. So it's really having that, and then also the relationships. Do you have local relationships? For me, in a market like Philly, I have a ton of local relationships, so I can solve a lot of problems. Oh, we had the electrics out. We need something quick. We need an inspector out here. I have people I can call that can come out quickly. Whereas if you're in a city where you're operating, you don't have those relationships, you can get jammed up. So you want to make sure that you're doing things the right way and you have the right relationships, or you're working with somebody who is local, who does have those relationships, because you will need them. If you don't have them, then you have to pay the time, tax, which it costs money. It costs money, carrying costs, interest payments, materials prices increasing, leaks appearing, all different types of things are going to happen. People breaking in, there's more exposure. So you just have to have your game tight there. But St. Louis has a lot of opportunity on the buy and hold side. So if you want to get cheap properties, I would go there. Philly, number 5. Philly's an interesting market because it has good appreciation. Like you can see St. Louis, the average home value is the lowest on the top 10, but the expected growth is 1.9%, which might be the lowest on this top 10 list. Philly is at like 2.6. New listings go pending in an average of 11 days. This was the hottest appreciating market in America, Philly, in like 2019. It's the hottest appreciating market almost year over year. It's been on the top 10 for almost a decade, realistically, if people are paying attention. But a lot of people don't pay attention. They sleep on Philly. I mean, it's the city of brotherly love, cool, but it's right next to New York. As New York gets more expensive, people get priced out. They move down to Philly. Prices keep going up. It's still an affordable city. It's the 6th largest city. It's got a lot going for it. Good market to flip in and hold in because the property values are relatively low in a lot of the neighborhoods. Number 4, Hartford, Connecticut. Similar story as Philly, only a different market. It's close to New York. There are going to be some people who choose it. It's projected to go up 4.2%. Or no, it went up 4.2% over 2024. That's so, and then it looks like in 2024 it went up by 7.4%. So this market is rapidly appreciating. It's a good market to buy and hold in. I've seen in the Connecticut and Hartford and kind of thereabout, I've seen 6 to 10 unit buildings going for 600K, which is cheap. A 6 to 10 unit in Philly could be $1 million. In Delaware could be 1.2. It changes everywhere you go. I've seen them the cheapest in Connecticut and in like that Hartford area. So if you're looking for commercial multifamily, kind of lower scale, 5 to 10 units, 5 to 12 units, maybe even up to 20, I would start looking in Connecticut and seriously considering that. And the appreciation is definitely built in there, which is why it's number 4. Number 3, Providence, Rhode Island. I would say this is more of a flip market, not necessarily a renter's market. Projected to grow by 3.7% in 2025. It looks like it did 7% appreciation in 2024. So even in that year, 2024, when a lot of people were like, "Oh, this market is going to be bad. Oh, is this a good time to buy?" Well, I mean, Providence went up 7%. Freaking Connecticut, Hartford, Connecticut went up 7.4%. A lot of people's 401k didn't go up 7.4%. And you get the tax write-offs and the cash flow in these markets. Although I would say Providence is more of a flippers market. It's not a cheap market. It's expensive. Indianapolis, there's just a lot of deals here. And I would say this is both. This is also a good wholesale market where you can get in without cash or credit, kind of reach out to people who are looking to sell. You'll see a lot of country homes here as well. So there'll be people who have houses that they can't really upkeep. they need to move them through a wholesaler, get them sold to a developer. So if you're going with like no cash, no credit, and you want to learn creative financing, you want to learn that that no money down that no money down playbook. If you want to kind of get into this type of stuff, the creative financing, the subject to the wholesale action steps, kind of all of that stuff, I would say this is a good market. And we have some people who are wholesaling there about. Number one, Buffalo, New York. Buffalo is definitely a good market. I've seen a lot. What you will locate here is a lot of those like 5 or 6 unit buildings, big 3,000, 4,000 square foot brownstone type of buildings, multiple units for very cheap. Not the easiest place to get like contractors. I mean, there are plenty of them, but you have to find the right crews there. The cost of rebuilding these properties is astronomical because they've been let go over the years. But cheap real estate, decent appreciation. Looks like it went up maybe like 5.8% year over year in 2024. So that gives you some growth potential there. But I've seen rapid development here. There's also a lot of free money in the state of New York to build affordable housing. So if you get into an area like Buffalo and you start excuse me, tapping into some of that free money, I mean, you can get up to 100K in some of these markets. 100K to build affordable housing is not too bad. Buffalo can be a top market because if you can get money and then run in there, start building your housing out, you're going to win long term. The market's going to appreciate. You're definitely going to win pretty big. So Buffalo is number one there. Now I broke down, and guys, if you're getting value, like, comment, subscribe, leave a comment that says I subscribed, share the content with someone else who you want to get value. If you're interested in any of our programs, including the Boots on the Ground program where we find, finance, rehab, tenant, and manage properties for you. So we do a turnkey. Just reach out, DM me Boots on the Ground, and we'll get you tapped in. And you can click the links in the description on the YouTube channel, or on IG. You can just DM me or click the link in bio if you want to tap into some of the free trainings. I took this top 10 list a step further. So I wanted to rank this top 10 list, the same list, just on cash flow. Because this is a 24/7 cash flow university. I'm always thinking cash flow. I'm also, even while flipping a property, thinking about, what if I didn't sell it? Could it cash flow? Those are like the safest flips, where if it doesn't sell, you can keep it, rent it, and try to cash flow it. So I rank them in terms of cash flow. Indianapolis is coming in number one because you have very low prices and rising rents due to low inventory. That's going to be a theme in a lot of these markets. They have a low housing inventory, or they have houses, but they're all dilapidated. So they have a low stock of properties that are rent ready. That will lead to increased pent up demand, rising rents. So you have that in Indianapolis. You have that in St. Louis. Very cheap properties, cheaper than Philly even. Are the rents as high? No, but the spread is good. The spread is good. I would still say Philly, to me, is a better opportunity. I like the market a lot better. I like the proximity to New York. I like the location better in general. Also, from the weather patterns that we've been seeing and how that impacts things, I want to be more in the Northeast, where the weather is a bit more predictable than the Midwest or down south, where you can get hit with some of the stuff that jacks up your insurance premiums. So I'm always thinking like that as well, especially if you're going to buy and hold for the long term. Kansas City is there. Philly's number four. So Philly's top five in both categories, which is, it's one of two or three that are in the top five on both categories. So that tells you it's definitely a good market to focus on, that you seriously want to consider. Buffalo, New York's number five. Buffalo is good. You definitely want to think about Buffalo if you're a new investor, you're looking for different markets, or you're close and around there. Richmond, Virginia's there. Charlotte's there. Providence, Rhode Island's 8. Hartford is number 9. And then we have Salt Lake City, which is just dead last. They just say it's better for equity growth than immediate cash flow, which is true. Most of the people I know, most investors from Salt Lake City, are looking for ways to get out and in terms of getting cash flow. I would say that's similar for like California. There are some people who will choose to invest in New York City for cash flow. I wouldn't recommend it. The landlord tenant laws are horrendous. I'd rather be in a city that has better or more balanced landlord tenant laws than New York City or California or some of these types of markets. So if you're in those markets, not only are they expensive, but then when you go to become a landlord, you realize the law is not on your side. Somebody can get in your house, pay 1 month rent, and then just sit there for like a year and a half. And to me, I mean, if you're sitting on a ton of cash and you could just buy properties all cash, that's cool. You can sit there and beef with somebody for a year and not bleed out on your mortgage. But if you're using leverage, you're doing the burst strategy, I would not scale an operation in a city like that. I'm very conscious of these cities. Mark said, whose list? And guys, that's it for the hardcore stuff. We're just gonna answer questions as you have them, and kind of flow from there. So hopefully you got value. If you did, definitely like, comment, subscribe, share the content with someone who you want to get value as well, who wants to tap into this game. Whose list am I reading? This list I took the list from Zillow. So the original list is Zillow's top 10. I took their top 10 list and I ran it through Chat GPT, and I said, Chat GPT, rank this list in terms of cash flow in today's market for 2025. So I had to pull statistics and re-rank this list purely for cash flow, because that's how what I would do anyway. Even if I was looking at some of these markets as flip markets, I want to see how they cash flow. Um, what are the supply demand metrics? Is there pent up market demand? And then you want to get local. You want to get into, well, where am I investing? Am I investing in the college area? Is there a working class here? What are the different market options that are available? And then what condition are the properties in that are on the market that need rehab? Because that can change. Like if I go to Delaware and buy a property, even what Delaware considers like the worst housing stock, it's better than Philly's worst. Some of these properties in Philly have been let go like beyond belief. So each market is different. Same thing in no, they've let some properties go in Baltimore, but pound for pound, if I take $90,000, a $90,000 loan, let's say a lender gives me a $100,000 limit, which is not a lot. Most lenders at a minimum are going to give you 150K a limit. I take that to Philly, I can do some damage. I take it to Baltimore, I mean, I can buy a property for 20K and then just go to town on it. So, and then when I spend that money, if I spent 70,000 equally in Philly and Baltimore, the property I could get for that 70,000 in Baltimore will be in substantially better shape. Substantially better shape. So that's kind of what you're looking at there. Guys, if you have any questions, drop them in the chat section, drop them in the comment section. But that's what I want you guys thinking about in terms of this market. Rates are gonna keep going down. These markets are gonna appreciate. They're gonna keep going up. Trump tariffs are gonna lead to, and then also like the ICE rates, that's gonna lead to some inflation on construction costs. So housing prices are going to rise. And then as rates go down, they're going to rise more. It's going to unlock demand. It's going to unlock supply as well. So you could anticipate right now prices going higher, rates going lower. The markets that have been appreciating, that are affordable markets. Like if you're seeing things like, I'll blow this up a little bit. If you're seeing things like Hartford, Connecticut, average home price 363,000. This is kind of like the median home price. 400 is a little higher. 500 is higher, right? But you start seeing 300, 300, 200, 200, Philly 300. This is, if you take this and multiply it against the area median income, the median income might be 60,000, somewhere between 50 to 60,000 in most of these markets. So then the average home in Philly is like 5 or 6x the median income. That's a very affordable market. The average American can afford, 6x. They can afford that type of property, especially a family, 2 adults, 2 kids. They can afford this type of stuff. When you start getting to, the median home price, 500,000, 600,000, 700, 800, a million. When you get to parts of California, it's a million. It's 1.5 on average. The average American, that's like 10 to 20x the average median income for the area. So now you're in a bubble market. So you can actually look at your markets and see, am I in an affordable or balanced market? Am I in a bubble territory market? If you're in an affordable market and you're in one of these top 10 type of areas where you can cash flow, prices are going to go up. The properties are going to appreciate and have been appreciating. If it's an affordable market, it's only 5, 6x the median income, and it appreciated 5, 7%. It's probably going to do it again. I've seen Philly go up as much as 19, 20% in a year. So it can definitely be done and kind of put you in the right position. So just keep that in mind and keep thinking through some of your deal analysis and your location analysis. This is more of like a criteria play, I would say, and choosing your top 10 and then building from there. But that's kind of how you want to think about it. Aaron Wright says, Brian, would Section 8 be a good option for a rental property? Section 8 is a great option for your rental properties. The story behind that is when in 2020, when everything kind of shut down for the reason we know why, everybody's masking up, everybody's kind of doing their thing. I came across a 108 property portfolio. It's two guys who built it, just like anybody watching this right now. Two guys had a idea in their late 20s, their 30s. We're gonna buy and hold some rental properties in Philly. I've seen so many people do this. Even the Section 8 Bible book that I tell you guys about. It's two guys, Philly. They built 400 houses. I've done 400 now. These guys had 108. They had them all Section 8 in the middle of the pandemic. Now, we're dealing with this. We're evaluating their portfolio and getting their books and their numbers, and their collection rate is like 92% in the middle of it, in the middle of a bunch of moratoriums, eviction moratorium, this, that, and the third. People are feeling all types of market pain. They're collecting 92% of their rents. I mean, they're so cash flow positive, it's obnoxious. But that was because the whole portfolio, all 108 of them, were Section 8. They were all Section 8. So when you're doing Section 8, Section 8 is not, it's not like the easiest play of all. The easiest play of all is probably like co-living or just market rentals, co-living or market rentals. Section 8 has different hoops you have to jump through. But when it comes to money time, see, we're all very short-term focused. We're all focused on this year, what's my cash on cash return? How much money did I make on this deal? Everybody's very short-term focused, which is cool. But realistically, all of the value is in the long term. All of the value is in, oh, well, this property appreciated 150K over the last 10 years. While you were out goofing off, traveling, going to concerts, doing whatever you're doing, this property's growing in value and the rent's doubled. And then you're like, whoa, that was a great deal. Even if you complained about it, like, I only wanted to have 20K left in it and I got 30 in it. This is a bummer. When you go out 10 years, it ain't a bummer. You're up 150K. Somebody paid down your mortgage, paid down a third of your mortgage. You got a ton of equity. Your rents are up. That's kind of the value of this thing. When you do it Section 8, it makes your portfolio very sturdy. So even though it takes a little bit longer than some other strategies, in terms of cash collection and being able to withstand different cycles of the market, there's going to be upswings where the market's just booming. Everybody's making money, doing everything in the game. Then there's going to be tighter markets, tighter cycles where people start getting squeezed and pinched. And when they're feeling the squeeze, and you pop up with the Section 8 portfolio with 15 houses, all Section 8, and you have property management in place, you're going to be getting that mailbox money. You're just going to be cash flowing 6, 7 thousand a month like clockwork. And it gives you, because you had the government backing those payments, that's what gives you the confidence to step away. It's not that you couldn't do it with market rentals. And I've had some great market rentals, by the way. I've had good co-living. I've had good market rentals. I've had good Section 8, and I've had bad of all of them too. I mean, you kind of have to navigate. You either learn, you tap into, something like our school and the classroom, and you kind of learn some of these things. Like we have a whole section just on just on Section 8 and the burst strategy and how to build and bulletproof your portfolio with Section 8, you either learn this way or you learn by going out and kind of just getting beat over the head and making mistakes until you figure it out. I mean, those are really your two, your two options there. So maybe you get beat over the head until you figure it out. But Section 8 to me is a very good strategy for that reason, because I want to bulletproof my portfolio. I'm thinking more long term. I'm not thinking as short term. The average Section 8 tenant stays for 5 to 8 years. Some stay longer, man. The rents go up over the course of time, and then the properties will appreciate. So you leave somebody in there 5 to 8 years, the government's paying. You're not worried as much about chasing people for money. You're going to have a lot of your portfolio where the government's paying 100%. So it's just a good way, in my opinion, to stabilize and bulletproof your portfolio. So I'm Section 8 all day, but also Section 8 is a tool, and you look at where the market is. If Section 8 is paying, the reason I like Section 8 a lot is because it can pay more than the market. So the market rent might be 1,700. Section 8 is 2,200. So if they're going to pay me a premium and the government's going to pay the rent, I'm in. But if it flipped and market was 22 and Section 8 was 17, then I'm market rent. And I'm going to run market rents until Section 8 shifts and catches up. Then I might prune my portfolio as people move out. I start replacing them with Section 8. Because the regular tenants, they're only going to stay for, 2 to 3 years on average. Some will stay longer, but you'll get that 2 to 3. So that'll help. I got a question on IG from Miss V. They're saying Trump is changing the time limit in those Section 8 homes. He may. I mean, he may, and then whoever else gets in office changes it back. I wouldn't look at any of that executive order level stuff as mattering all that much, especially on things like that. Like by the time that kicked in, somebody else gets in office and they just sign a executive order undoing all of it. So yeah, that's kind of that. No, this is a good question, Mark. You just texted me. How do mentees access the community website? Just DM me or text me. If you're already in Boots on the Ground, the Inner Circle, you have access to everything we're looking at here. You just have to DM me. We just launched this. I just uploaded all of the course content here over the weekend, so that we can have this and really start utilizing this community, because the community piece is very important. Not only to have access to me for questions, but there are other people in the group. There are other private lenders. There are DSCR lenders. I put my architect in here. I'm putting my insurance guy in here. I put my accountant group in here, so that as you guys come in, you can just go ahead and access that. Oh, how do I do my taxes to get the best tax losses? Here's my group. Contact them. How do I build this house and do XYZ? Here's the architect. Contact them. So it gives you access to the network, even more so than the community, the network, and then also all the content, the recordings of the mastermind calls, all that stuff. So the community, definitely reach out. Everybody who's already in, tap in. Those who aren't in, you want to tap into something like that if you're going to get results. You want to tap into something like that. There's a lot of courses out there, and courses are cool, and they'll get you like halfway there, but it's really having more support. And what I've seen over the course of time is also having access to the network and to other investors and private lenders and those different relationships, and then being able to get your questions answered. That's what accelerates you beyond the competition, because it's not just about getting better. It's about just beating the competition as quickly as possible. So having that full community aspect is crucial. But that's a good question, Mark. What's the inner circle? The inner circle is that is our mentorship program, where we give you access to everything we just showed you: the school, the community, the course content. You'll have the ability to chat with me as well. So we have like a DM function in here where you can ping me with questions. So it gives you access to me, the network, all of our course content that we put together over the years to show you. Add back to the stage. Yeah, I got kicked out. Let me share the screen again. Give me 1 second. Yeah, it gives you access to all of this stuff. So yeah, we're still flowing. You'll get access to this, the fast track, the no money down playbook. All of this stuff will give you just a lot of information on how to get started. I would say the no money down playbook for all the people who've been struggling because you don't have enough cash or credit to get started. The no money down playbook will show you how what it truly means to operate without cash or credit. It's not what you think. I'll say for the average person, it's not what you think. The off market deal finder is really good if you're in a priced out market and you need to be able to find off market deals, or you're like trying to wholesale. This can be really good. We have all that property analysis stuff here as well. This is single to multifamily conversions, but our stress test toolkit, how to do comps, how to analyze deals, how to build rehab budgets. So I kind of walk you through that full process as well, and how to analyze deals. So there's just a lot there. But yeah, you'll have access to all of this within Inner Circle. So if you're interested in Inner Circle, just reach out, DM me, text me, email me, however you got here, drop a comment and we'll reach out. Or you can click the link. I would say that's probably the best. If you click the link in the description that we put there, you can kind of book a call with me and the team and reach out about the Inner Circle. But really excited about this new platform that we put together, this new community, and more importantly, just the members. You can even access, as you can see, like the live calls right from the community, but just the different lenders that we have in here, and the ability to just share wins. Like we had one of our members here; they got their first deal under contract within like a month of the Boots on the Ground program, so they're fired up. And you have people in the community just kind of supporting other people on the journey. So that's always, to me, cool to see. But another touch point where I can also dig in and answer your questions in a way where the whole group can learn. Because while you're asking questions, other people have those same questions, or they will have them in the future. So it's good to have them compiled in a area where we can all learn and ask those questions and get support from other members. But I wouldn't worry about Trump in Section 8. Trump's got bigger fish to fry than Section 8. Section 8 is a hard one. It's a real hard one to fry. Doreen says, when you join Boots on the Ground, do you have access to the Inner Circle too? Yeah, Boots on the Ground is like the highest level. Boots on the Ground is where you're truly working with me one on one. Even Boots on the Ground goes above just the community level, because then you have access like text, email support. We can set up quick calls. You have like a different level of access even with Boots on the Ground, and then we're finding properties and building them for you. So we're truly holding your hand through your first deal in the in like every aspect of it, finding it, connecting you with the lenders, all the different relationships, architects, engineers, all of that stuff, facilitating it all, handling the construction, handling the coordination, handling your rental licenses, and pulling all of that stuff. Like, we're doing a lot. So um you would get access to all of this course content and everything, and be at like that top tier as well. Mark Wright is in, so he says, Doreen, you absolutely do. He knows because he's in. He's a Boots on the Ground member. He's been out to a ride along, so he could also tell you guys about that ride along tour. The one he came out to was pretty cool. So the ride along definitely changes things, I would say. If you have fear of real estate investing, if you've never built a house before and that just horrifies you, or even before I built a house, buying a house, it was like horrifying. It's like, man, what if this thing falls down? How do I know if it's good? Can I deal with this? What does this cost? What does that cost? I'm asking my realtor what things cost. They don't know. They have no idea. Hopefully they'll tell you they don't know. Some of them will try to answer the question, which is give you a false sense of confidence. So yeah, you kind of you need as much information as you can get, is the bottom line, before you get into the game. But the ride along gives you that hands-on experience that takes the fear out of construction, where you can stand in the house, see the rehab budgets, understand at more of an intimate level how houses are put back together. What are the issues you run into? Versus just having that fear in your mind of, well, what does that cost? Just get the answer. Oh, what does that cost? That costs about 10K. Takes about this long to do it. Here's the process to do it. And you're looking at it. And then you're like, okay. And then you get some course content as well. When you come out to the ride along, you at the very least will leave that with the creative financing piece, like the no debt. When you come out to the ride along, you get the no money down playbook and you get the construction crash course. So you're going to learn how to full gut renovate properties and how to get your hands on really cheap properties and structure deals at a high level. That will lace you up. That plus a ride along, plus a 24/7 cash flow hoodie, you're going to be ready to rock and roll. I would say the ride along is the one experience that I wish I had done before investing. If I could do any one thing, go through a course, probably actually an inner circle would have helped me. Being a part of the inner circle would have helped me tremendously. But that was like, I mean, you can only start doing this stuff today with today's apps and technology. When I was getting started, I mean, there was you couldn't even get the course content kind of built out like that. You just had to get like 10 phone calls with somebody and ask them questions. Hope you ask the right questions and hope you can remember the answers. The inner circle will help. The course content will help. In terms of fear and actually building, if you want to really get into this bird strategy thing, the ride along, I think it's a must at some point. You might not do it. You might go out and build your first house and you can stand in your own house. You're just going to be more afraid than if you came out and did a ride along. So it'll probably take you longer to get results without doing a ride along. With a ride along, that should be enough for the average bear to get over the hump and just dive straight into your first deal. And I'll lace you up with enough course content so that you have the access to the knowledge. If you just had that and you were in the community, you could reach out to people, you have some resources. That's enough to put you light years ahead of me when I got started. And I was dangerous. I mean, I always tell you guys, I knew less than 1% of what I know today when I did my first deal, which means you don't really have to know much of anything because I surely didn't. And if I'm putting you light years ahead of that, you're going to be successful, even on your first deal. And our goal is to get you into your first deal. Not everybody's ready, but within about 90 days. It only takes 90 days to get into your first deal if you've never done a deal before. 30 days of learning, 30 days of systems and action steps and setup, and then 30 days of execution. That's your journey. It ain't like going to college. You don't need to do 4 years and a bunch of semesters and go from freshman to junior. You don't need to do all that. 30 days, tap into the course content, ask questions, start setting up the systems, get some direction. Next 30 days, and then start taking action, firing out offers, putting deals under contract, getting bids, go after it. I just did analysis for somebody, and it's like I teed them up. Like they had a lot of questions, and it's like I teed them up. But at some point within your analysis, rubber meets the road time. You have to go out and do it. There are going to be times where you have to go out. You got to call some contractors out to the property. You got to get some quotes. You got to talk to some architects and engineers. That's what's holding you back now. It's not like knowledge is holding you back. It's that you have some mental blocker that's preventing you from picking up the phone and calling an architect. How do I know what I could build? How do I pick up the phone, go on Google, go on Angie's List, go wherever you got to go to support groups. Hopefully you're in something like our platform. You're in like a community where you can reach out to people. You could drop something. Hey, I need access. I need help with XYZ. Need a good contractor. Any recommendations? Like you're dropping something in where you have a community somewhere, and you got to start making phone calls and getting people out. You got to start making phone calls and getting people out to the property to get that rubber meets the road time type of information. So that's what I would say there. It's very interesting to see people in that position where they want to do a deal, but they still have those blockers. It's like you almost can't see them, but it's really like a fear-based procrastination. It's just fear. You're afraid to act. You're afraid to move. You got to push these deals forward with your activity, whatever it takes. however many days it takes. Mark says the ride along is great because seeing and touching the properties makes it real. You see houses in all stages of disrepair and repair. Exactly. It's not only seeing the properties in in disrepair, seeing them in rough condition, but then or seeing them in repair. Neither would help you fully. It's seeing the transition, seeing some houses that are in shell condition, like, hey, we didn't even touch this one. And you're like, damn, this thing's a bomb. And then you walk into one and it's like, all right, we're just framing and wiring this one. You're like, oh, that's what's behind the walls. Then going into the finished one. And you're like, wait, this used to look like that first one? Yeah, that's the full transition. That's the full transition. Seeing that and then having access to the numbers, the actual cost of the construction. Um that that can help you. Somebody said I just got here. What are we talking? We're just answering questions right now. We're talking about the real estate ride along tour, which is Saturday, March 15th. That's where you get to spend a day with me touring properties in Philly in all different stages. We're probably building about 25 to 30 houses right now. So we're doing a lot. But and we want to do more. I mean, we want to do 200 this year. That's the goal. And I think we'll achieve it. We will hit it. 200 deals this year. So it's good to see that type of stuff. It's an exhausting day because we're gonna run in and out of 15 to 20 properties. Um, yeah, in any state of repair, so in any condition. The real estate ride along tour is in Philly. But yeah, these properties are in any condition. But yeah, that's what I would say the overall value of that real estate ride along tour is. And you can't fake it. You got to get out there. You got to get out there, step foot in the property, and get the jitters out. And once you do it, you're going to find out if you love it, if you're cut out for it, or if you're not. And you need to answer that question. If you're not, maybe you just get into wholesaling or creative financing. There's nothing wrong with that. You can make a lot of money. We have mentees who made really good money doing that. You might be more of a flipper. You might be more of a buy and holder. You might be more turnkey. You might want to do boots on the ground for your first rehab, so you can see how it goes. See how it goes with some training wheels on, because a lot can go wrong. A lot, actually, it's not only a lot can go wrong, anything can go wrong on any deal. That's the nature of real estate, is anything could go wrong. I've been building houses, house collapsed. Um, I've had houses catch on fire, but not like full fire. I had a tenant like burned down a kitchen, but that actually ended up being profitable, which was interesting. That actually ended up being profitable for the tenant to burn the hell out of the kitchen. Um, so you deal with stuff. I had one where I was 100 miles away and the basement flooding was so crazy. I mean, I don't know where all this water came from. This guy had 4 feet of water, 5 feet of water in the basement. It was the craziest thing I'd seen. And I was like, man, is this house just going to explode? Like, what in the world is going on? So I've seen a lot of things, but they all get solved at the end of the day. They all get solved, and you move on, and you learn from it. I would just say it's you'd rather learn at a ride along than on your own deal. Than on your own deal. Learning on your own deal is extremely painful. It's not fun. Learning on a ride along is very much so fun. You go look at it, you grab a bite to eat, you get a hoodie, like you get your course content that now makes sense because you've actually walked properties and seen budgets and done all these things. That's the best way to learn. Learning on your own deal is painful, man. It really hurts when you get crushed. When you thought, oh, I thought we could save that wall. And then the guy's like, nah, this wall is coming down. It's going to be 8,000. And then it ends up being 12,000. Because, as they took down that section of the wall, you know what? It's actually a little worse than we thought. We thought it was just the outer layer of the brick. It's actually both layers. And it goes a little bit further. And now that we took that one down, that other wall started bowing. Now we got to take that down too. It's a dirty game. But there's a way to navigate it. You can see those issues and just avoid them. You can see those issues and inspect for them and avoid them. And that's why you want to get to your knowledge, because you end up paying either way. join a community and get educated, or you have no community and the game educates you and it'll punish you. The way it educates is a lot harsher. The real estate game's like your drunk dad. Like, and he's not a happy drunk. Like that's the real estate game. So it's like you want to learn that way, you're gonna get smacked around a little bit. If you want to learn the easy way, then you kind of learn in a more pleasant fashion, I'll say. But you have to be ready to pull the trigger. You have to be really serious about this game. Doesn't need you don't have to put a lot of time into it, but you do have to get to the direct information, in my opinion. It's not a time warp. It's just more about getting straight to the systems, getting straight to the logic of how to operate and where to find value and how to get in front of good deals. So just about anybody could do it who wants to do it, who has the focus. And that's the question: is do you have the focus? Do you have the time? And most people don't believe in themselves enough to take any leap of faith on themselves anyway. Unfortunately, so they stay stuck. That's why the majority of people will just stay stuck wherever they're at. Most people, in fact, by the time they hit 40, they don't really do anything else. They don't really achieve much more. They just kind of stay stuck on whatever path they're on. So you got to push it. Both hands, both feet. Try to get to the next level. Or you'll probably wake up 20 years from now getting pushed out of a 9 to 5 that you hated anyway, but that you ended up giving all your time and energy to. So make that choice wisely, push yourself, and get educated. Somebody said, I'm taking 5 leaps of faith this week, going all in. Sneaker grill, 1017. Or you will regret it forever. Yeah, you will regret it forever. Because you don't take it with you anyway. You're not gonna take any of the money with you anyway, any of the value. So many people are like, if I invest in myself, what if I lose money? What if I get burnt? You're not gonna take it with you anyway. And you're gonna blow it anyway. Look at what you spend your money on now anyway. Most of it is junk anyway. You still would be better off if you're gonna push yourself and learn and actually absorb information. I love this community aspect because it's a better way to learn, not only from not only from kind of classroom setup, but just the community aspect and ability to like DM and do direct chats and stuff like that. It's to me a better way to learn. It's a way better way to learn and connect. But yeah, either way, you have to go in. You have to go all in, and you have to bet on yourself, or you stay stuck. And to me, staying stuck, I was always more afraid of that. I started off working 100% commission because of that. I was afraid of the 9 to 5. I wanted part of me started off 100% commission just as a rejection of the 9 to 5 anyway. It's like I'm going to be a commission person even within this field. I always want to go. I want to learn how to get mine out of the mud, even if I have to. But have that freedom, have that fearlessness, because the 9 to 5, it actually it makes you afraid to go out on your own. It takes away your self-belief. It takes away your self-belief. It takes it and replaces it with belief in the 9 to 5, belief in your boss. You have to use somebody. Sneaker Grail said you have to use the 9 to 5 as a crutch to get where you want to be. Yeah. Well, you use it as a tool as well. Like the 9 to 5 is your friend. It gives you the money to fund your dreams, to fund your operation. So the 9 to 5 is your friend as well. It is your friend. So it's all a matter of perspective. So what's the no money down link? Just reach out, book a call with me and my team, DM me, text me. But yeah, if you wanna get access to the no money down playbook, just let me know. Just let me know. For those who are already in, if you need access to any of this stuff, just chat me, DM me, ping me in the community, and we'll make sure you have access. We also had the credit repair blueprint in here as well, the credit hacker crash course. So many people are struggling with different credit issues, so we show you some hacks, how to just boost your credit very quickly. These are all the fast hacks. These aren't like the slow and steady hacks. real estate automation, how to scale with virtual assistants, all of that stuff. That's good. That's good information for, not burning out, not doing this all on your own. Yeah, the 9 to 5 will lull you to sleep over time. It will rock you to sleep. It will rock you straight to sleep. That 9 to 5. It will rock you straight to sleep. If you need access or if you want access to our community, just DM me. That thing will rock you to sleep. That 9 to 5. But it's a tool. If you use it, it's a double-edged sword. Double-edged sword. So you can get stabbed or you can stab. You can use it as a tool, or it can be used against you if you're just asleep at the wheel. So you just have to pay attention. You have to go after your goals. Life's short, time is short. Life is short, time is short. We had one guy, it was a partnership, tapped into the boots on the ground. One of the partners passed away. Young guys too. These aren't old guys. Young guys. And I'm like, whoa, one is checked out. So he's going for his dream. Like, he's doing all of this stuff, going for his dream, fully conscious, fully awake, fully mobile, gone. And it's like, damn, life's short, man. It's too short to be overly concerned with potential failure. Go out and fail. The thing I tell people all the time is, people today are so self-centered, especially with social media. They don't care if you win or lose. People just care about themselves. So while you're sitting there worried about, what if I fail? What is so and so going to think? They're not even thinking about you anyway. They're not even thinking about you anyway. Is the truth. So it doesn't matter. You're doing this for you and for your family. So you either win or lose by yourself. It doesn't matter. Even if you lose, as long as you learn and get back up and come back again, you win the second time. You might the loss, you could lose and be down 30K and it could feel like 3 million. And then you could win and actually go up 3 million, and then the 30K will be like it'll be laughable. You'll be like, man, what was I even tripping on? What was I even worried about? Wow, I was complaining about that. My payroll is 40K a month now. You'll be operating at a different level, different frequency. You won't care. So even some early losses may be just stepping stones into much bigger wins. You have to stay open-minded, keep long the long shot, the long picture, that long-term point of view. You have to keep that at all times if you want to win, not only in this game but in many facets of life. You have to look a little bit longer term. Look out 5 years, where are you going to be with your current plan, and then kind of map it out from there. So I hope that helps, guys. We're going to be doing our Inner Circle call on Wednesday. So for all the Inner Circle members, reach out, DM me, get into the community ASAP. I may disable all other course content to force you guys into the community, because it's better for you. It's better for all of you to be a part and assist each other and continue to network. We have investors from all over the country, even outside of the country, within the community. So definitely reach out and stay tapped in. If you guys need me, you know how to get a hold of me. For those in the Inner Circle, I'll see you on Wednesday night at 9 Eastern for the Inner Circle call. If you want access to any of these modules, just reach out. Click the links in the description. Click the link in bio. Like, comment, subscribe. Share the content with someone else that you want to get value. And I'll see you guys on the next one.